a simple strategy that I've been using for a long time now, and I just wanted to share it with you guys so that maybe it can benefit one or two guys, especially if you are using indicators, right? So what I'm gonna do here is I'm going to be, let me remove this. Let me show you the indicators that I'm going to be using, right? So this one we don't really need it, right? So what we're going to be adding is, first of all, the first indicator that we want to add is the 13 exponential moving average over here, 13 over here exponential apply to close, right? Then that's the red one on my chart, and that's style, right? And click save, right? Then for the next moving average that I'm going to be using is the 50 moving average, and that's the blue chart, that's the blue line on my chart, right? So if you can see this blue line over here, exponential apply to close again, right? Then click save. Then the 200 moving average, exponential apply to close again, and then it's purple on my chart. But over here, the ones that I really want to talk about, right, is the 13, right, which is that green one over there, right? Sorry, 13, which is the red dotted one over here, and the blue, right? And then the purple, that's the 200 moving average, right? So first of all, let's just discuss what do you look for, right? So we first have to determine the trend, right? So determining the trend, that's when you only use the purple moving average, right? So if the candlesticks are below the 200 moving average, below this purple line, it means that we're in a downtrend. So we're supposed to be looking for selling opportunities, right? And then the opposite is also true if the opposite is also true if the 200 moving average is below the candlesticks, which means we are only looking for buys, right? We're only looking bullish, right? So we're looking for buys only, right? So that's the first criteria that we have to look at, right? So over here, this strategy, you can use it on the 5-minute or on the 15-minute time frame, right? Those are the main two time frames that I use personally, right? And remember, guys, if you're not subscribed to this channel yet, subscribe, because I've seen that about 79% of you guys who watch this channel aren't subscribed yet, and over about 100% of you are all males. Aren't you sharing these videos with your girlfriends? Anyways, don't forget to boop the like button, right? So over here, what we're going to be doing is, for our entries over here, what we're going to be doing, right? So let's take this, for example, over here, right? If the purple moving average over here is above the candlesticks, it means we're looking for our selling opportunities, right? So over here, what do we have to wait for, right? First of all, we have to wait for a pullback to the 50 moving average, which is the blue line over here, right? After that pullback over there, then you get your entry, especially if it's for ticks, right? When the candles close below this 13, below the red 13 moving average over here, this line over here, right? So right over here, we'll be taking our entry over here, right? And your stop loss, we put it above over there. And usually, since you are trading along with the trend, usually you just target 1:3 risk to reward ratio from the previous high that was formed, right? So that's like how you just do this, right? And especially if it's for spikes, right? When the candlesticks pull back to the 13 moving average, usually there is also another spike, right? But that's not always the case, because as you can see over here, it missed a little bit by a small margin over here. It didn't quite touch the red moving average. But you can also use this for our exit criteria, right? So over here, right? So let's take this for example over here, right? When the candlesticks pull back to the 13 moving average, right? First of all, we've got this small spike over there, right? Then when that small spike gets broken again, right? So when you form the second candle above the 13 moving average, usually it means that there is no spike that's coming again, right? So that's how you can do this, right? For over here again, right? Though this one over here, as you can see, we would pull back to the 50 moving average, but we won't buy because the 200 moving average is above, so we're only looking for selling opportunities over here, right? Selling opportunities over here. So as you can see, here's another example of an entry, close below stop loss, and as you can see, it's easily a 1:2, 1:3, right? And when there's a close above the 10 moving average, you can exit your trade. So this strategy works both for spikes and for trading ticks, right? So I've shown you an example for spikes, right? So let me show you an example for ticks over here. We've got another perfect example over here, right? So candlesticks are below the 200 moving average over here, right? and we've got what? A pullback to the 50 moving average. This over here is not a pullback to the 50 moving average because it didn't touch the 50 moving average, right? This is the first pullback to the 50 moving average, right? And the candle close above the 50 moving average, which means you're entering here. Your stop loss goes over here and you take profit. As you can see, you would have easily smashed that take profit, right? So the same entry and exit criteria that we have used before, right? And the 200 moving average is a little bit more complex. So if you want to see how we're going to be using the 200 moving averages, because we don't enter the way that we've entered over here, right? Then just comment in the comment section down below and I will create a video for that on that, right? So peace, that's it for this video. Don't forget to boop the like button if you have learned a thing or two from this video.